You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca, Canada's first online financial news and research service. Welcome to the show, Ted.
It's great to be back, Jim.
Interest rates. In Japan and Europe, they're negative. What about interest rates in North America?
Well, I'll say fortunately we haven't gone there yet, although there's growing calls for the U.S. to go to negative interest rates. And our central bank, although it professes to only be interested in doing it in an emergency, we saw the panic that Stephen Polo's had when the oil price dropped. So I don't think it would take much to nudge him into negative interest rates either. You know, what we've seen over the last few months is a turn in markets where they're really what we describe as acting as non-normal, in that when central banks undertake certain actions, markets behave in unexpected ways. So let's talk about the Bank of Japan. The Bank of Japan at the end of January thought they would give some asset prices, I guess, in their economy a boost. They went into surprise negative interest rates, although it was clearly not a unanimous decision on the Bank of Japan board. And what happened? Well, the yen weakened for one day, but that was it. And now the yen is strengthening. The U.S. dollar has collapsed against the yen. It's off almost 5%, I think, since they made the announcement. This was not expected. People would have expected, well, you're going negative interest rates, you're going to devalue the yen. The yen's going to go to 130 against the U.S. dollar. Well, now, as we're talking, it's under 115. So this has been a shock to the central bank thinking that this type of response happened. Now, the other issue is that the United States is very concerned, I believe at this point now, about the U.S. dollar getting too strong, because I don't think it was a coincidence that the Monday after, Stanley Fischer, vice chairman of the Fed, said, well, you know, we think this U.S. dollar going up is too much of a good thing. So you've got the Fed and the Bank of Japan seemingly working at cross purposes now. And this is impacting markets. It's not a surprise to see lots of volatility, the stock market selling off, people flocking to the perceived safety of government bonds, when you've got central banks undertaking actions that A, don't work, and B, seem to be in conflict with each other. And again, you know, you've got an example in Europe where you've got the ECB talking about how it's trying to stimulate the economy and stimulate loans. It's talking about going further into negative interest rates. Meanwhile, they're absolutely destroying the capital of their banking system. I mean, Deutsche Bank shares have collapsed under this negative interest rate policy, and you've got the ECB talking about doing more. You really wonder, Jim, what is going on with these policymakers? They're totally divorced from what's going on in the real world. And let's bring it right home to Canada. Okay, so we had a new central bank governor appointed in June 2013. He gets in the job in July, first meeting, decides he's going to try and talk down the Canadian dollar when oil's trading at $100. His view was, well, I'm going to stimulate the export industry. Well, guess what happened? As you loosen monetary policy, you get hot money flowing in. Did it flow into the manufacturing industry? Did it flow into the export industry? No. Where did it flow into, Jim?
The banks.
The banks, well, it flew into the banks who flew it into the oil patch. And so we had even more money going into the oil patch when oil was at $100. And guess what we have now in the oil patch? We have a huge recession. Okay, so we had the Bank of Canada thinking it was going to boost exports. Okay, we have seen an uptick in exports, but we have not seen an uptick in market share or volumes to speak of. We're still below where we were against the United States on export volumes. So his rebalancing of the economy turned out to be an unbalancing of the economy. And we're also seeing some aspects and some repercussions of this ultra-low Bank of Canada interest rate and loose money policy right here in Vancouver, where some excellent work in the Globe and Mail over the weekend revealed the extent of the inside speculation that is going on in the market right now. And basically, there were a number of issues that were uncovered in this expose, which was in the Friday edition of the Globe and Mail, and it's really speaks volumes. By the way, I think is why we need paid journalism in Canada. That you can't leave it all up to the bloggers and the free ad-driven websites to uncover this type of activity. But there were so many issues uncovered in that one piece. I'm just going to focus in on one of them, and that is basically how it appears that insiders in the industry have figured out that they can flip properties using assignment clauses so they can avoid paying the property transfer tax. Okay, and I'm focusing on that because that impacts every British Columbian. You can say, well, Ted, it's only the real estate market in Vancouver. Well, no, hold on a minute. What it means is that these insiders have figured out that if they can flip properties using assignment clauses, they don't have to pay property transfer tax. So that is just complete unfair, because you have to have a tax system where it treats everybody the same. So, Jim, if you're selling your house, you're going to pay property transfer tax. Why should a real estate insider avoid doing that? And you can say, well, Ted, okay, but they're going to pay income tax if they declare it, of course, and so they're going to be paying tax anyways. Okay. Well, if your brother is a developer and your brother owns a property and he sells it, he has to pay not only property transfer tax, but he also has to pay income tax on that profit. Now, why did your brother have to pay both when a real estate insider doesn't have to pay the property transfer tax? And we could be talking about significant amounts of money. That doesn't, and the fact of the matter is, whether it's $10 million a year that's being circumvented or $100 million a year, the fact of the matter is it's significant, and we have a tax fairness problem in British Columbia right now. And thanks to Kathy Taylor, thanks to the work that Kathy Tomlinson, not Kathy Taylor, Tomlinson did in the Globe and Mail, this has been exposed. Now, this has probably been going on for years, okay, to some extent, this sort of using assignments and but had it not been for the Bank of Canada driving down interest rates so low, we would not have had what appears to be an insider stampede into this type of behavior. So, it all comes down to when you drive down interest rates to abnormal levels, you're going to get abnormal consequences. And unfortunately, we've seen it happen in Calgary, and we see it happening here in Vancouver, and it's not going to end well, likely. Now, there is the possibility that, all these people who are buying at the top, well, I'm going to call it the top, we can have another discussion, but let's assume we're near a top because we've gone way above the normal real estate return averages for what's expected in Vancouver real estate. Let's say we're near the top. People who have bought near the top may be a long time before they're able to receive a normal return on that. Okay, and that's, I think, the best case scenario. The worst case scenario, of course, is we're near a top end and it kind of corrects quickly. I don't think that's going to happen, but it's a possibility. Okay, so we've got a situation now where you've got abnormal behavior going on in the Vancouver real estate market. You had overbuilding in the oil patch. This is thanks to the ultra-low interest rate policy of the Bank of Canada. And in terms of the real estate market, it's also thanks to Ottawa's meddling in the dynamics of the housing market by subsidizing CMHC, who've been handing out mortgage insurance. And that's also distorted demand in the market. So, you've got a couple of factors, but I think the big gorilla in the room is still what's been going on with the central bank. And we're at a tipping point now, I think, globally, where central bank policies are having adverse consequences. I think this is something to be very concerned about, and I think it's why the BC government is going to have to act very quickly on what's going on with the assignment clauses in order to say that they've been able to do something in case we get a disorderly reversal in the Vancouver property market. It's not the base case, but it is not an insignificant outcome, and no politician wants to wear that. And so I think, there is a good motivational factor here for the BC government to at least deal with the assignment issue of being able to apparently circumvent the property transfer tax payments.
Yeah, the example I saw in the Globe and Mail on how this assignment clause can be an issue is a couple gets $2.4 million for their home, and then the real estate agent flips it for $6 million. Why didn't they get that couple the $6 million to start with?
Well, and that opens up the whole issue about best interest. I mean, that's an important topic in all financial services. It's an important topic in terms of financial advisors in general in Canada. I mean, we're hoping to see in Canada that the OSC will bring in a best interest rule where your financial advisor has to act on your best interest. Right now, they have to ensure that they're acting in ways that are suitable for you. There's a big difference, because when you act in the way that's suitable for your client, it doesn't mean you're acting in the optimal wealth maximizing way for your client. You can believe it or not, there's nothing stopping you from acting in the wealth maximizing taking the wealth maximizing approach for you as a financial advisor, as long as you do it in a way that's suitable for your customer. So, this is a bit ridiculous, and we're just waiting for the OSC to kind of put this in writing. Well, I think there's a good case for putting it in writing in Vancouver real estate practices, because there seems to be plenty of evidence that best interests are being sacrificed here. And again, none of this would have gotten to the point without these ultra low rates. And, we're seeing this around the globe. We've seen it in the United States leading up to 2008. We're seeing, a total disallocation of the financial system, I would argue, right now in Europe. And we're seeing, of course, lots of problems in China. So, Canada's not immune. We've seen it in the oil patch, and I know there's lots of, I know the consensus is, well, nothing could happen in Vancouver or Toronto. Too diversified, the economy's too diversified. Well, we will see. When you get central banks distorting market mechanisms as much as the Bank of Canada has distorted it in Canada, and they've done a lot of damage, there are going to be consequences to be paid.
Mm-hmm. Now, what are the long-term implications of this? I know in Calgary, of course, house prices have plummeted because of the downturn in the oil patch. But what would happen in Vancouver? What could precipitate a big drop in real estate prices here?
Well, I think that you would have bad press from about the industry that shakes confidence, and people just slow down their buying. But I think the big concern right now has to be the demand out of China, because there are some people who deny that China has had much of an impact on real estate prices in Canada. I'm not one of them in Vancouver. I think it's pretty clear that we've had a lot of offshore buying from China. I don't think that's bad, provided it's done for the right reasons and the right purposes. But one can debate that as a separate issue. I'm not suggesting that is the problem. It just happens to be an outcome of various events globally in the last 10 years. But what if the Chinese demand for properties in the west side of Vancouver slows down? What if it goes into reverse? And why would that happen? Well, it could happen for two reasons. It could happen because there's rules brought in to prohibit foreign ownership. I don't think that's going to happen in Canada. But there happens to be some evidence that household formation in China has peaked. So that means that if that is the case, just as we saw Japan 30 years ago, there's going to be less demand for housing, as there was 5 years ago, from the Chinese globally. So there could be just natural forces at work in China that could lower demand for Vancouver real estate. And that's why I think we have a bit of this kind of panic flipping amongst insiders in the real estate industry, because I think there may be some people know that that these good times are here for here for a short time, not a long time. And there could be some very natural forces at work that will supersede anything that governments try to do, by the way, to regulate the industry. So, ironically, you may have natural forces that slow down the real estate market well in advance of anything that governments try to do. So I would keep an eye on what the demand is from Asia for Vancouver real estate, whether we've seen a peak in that or not, and that could slow things down. Now, again, I don't think the base case is a sharp correction. I think the base case is a return to the normal returns that you see in real estate in Vancouver, which over the last 25 years is 5% a year. And, you can get that to that point in many ways. It doesn't necessarily require a drop in prices. It could just mean a consolidation in prices for a number of years. But that means that anyone who's buying a house right now, as long as they're buying to live in it, there's no problem. But if you're buying on the expectation, you're going to be able to flip it like you read in that Globe and Mail article, that carousel ride is going to stop soon, and you're probably right at the point where the amusement park is about to shut down for the night.
How would you rate the job that Stephen Poloz has done so far as the governor of the Bank of Canada?
Well, I think it's been pretty poor. We've already had one recession under his watch, and we've seen a collapse in the Canadian dollar. To his credit, inflation is within the range. So three cheers for Canada not having a deflation problem. So I'll have to give him credit for that. But look at how, in getting us there, he's taken a sledgehammer to the economy. We've seen lots of pain in the oil patch. We see that the burden of the inflation rate has fallen onto the poor because because inflation has hit food prices the hardest. Well, that hits the poor the hardest. It hits people who can't afford homes in Vancouver the hardest. It hits people who can't afford homes in Toronto the hardest. So, he's really done a horrible job in terms of, where the burden lies. I mean, unless you're quite happy to see that kind of inequality evolve in Canada, and I think that it's just been a dismal period under his leadership, and it's really shameful that there's not more accountability being pointed towards the Bank of Canada for the inequality that's being driven under the current approach to drive down the dollar and boost up housing and food prices. I mean, that's what the age we're living in under the current Bank of Canada regime. And I should add, Jim, by the way, the Bank of Canada does not operate like the Supreme Court or even the Fed. In the Supreme Court, when they issue a ruling, you got all the judges, they make their decision, and the majority ruling wins. In the Fed, you have a vote on a policy change. Well, in the Bank of Canada, it's one person who decides, and that one person is the Bank of Canada governor. In this case, it's Stephen Poloz. So it is fair, I think, to point the attention to him in terms of policy decisions, because it's quite clear under the Bank of Canada Act that he is the person who is responsible. It's not a committee. So in one sense, it's good. You have the potential for more accountability, but I just don't see that accountability in Canada. I haven't seen a lot of accountability being placed on the Bank of Canada for what I think have been pretty disastrous policy outcomes.
Right, and every time the central bank lowers interest rates, the ideal is that consumers, to power the economy, will get a lower rate, but that's not always the case. I've seen drops in the central bank rate, but the commercial banks haven't followed suit.
Unfortunately, that game was played by Mark Carney and David Dodge years ago, and there's no more, like you said, there's no more firepower in that. And this notion of going to negative rates, if we go to negative rates in Canada, we're going to have the dislocation in housing markets and capital markets. It's going to take a generation to recalibrate back to normal. So this would be a total disaster for Canada if we went to negative interest rates.
Right. And I've always heard the complaint, Canadians don't save enough, but if you have to pay the bank to hold your money, what's the incentive for saving?
Exactly. And the idea of these central banks was, well, then it'll force people to, take riskier bets in their investments. Well, some people have done that, but guess where the majority of the money has gone? It's gone into government bonds, right? So it's basically done is lowered the cost of government borrowing, which is great for governments, but then the question is, what do governments do with that? And now, that brings us back to the infrastructure spending that's been promised by the new government, and I would say that makes a lot of sense, only because, look, they can borrow basically for free. You and I cannot borrow for free, even though apparently interest rates are near zero in Canada. But the government of Canada can. So there's a good argument, and not even from a stimulus, whether you believe in government stimulus or not. There's a good argument if we can identify productivity enhancing infrastructure projects. Well, when the government can finance those basically for free, then there's a good argument to make those on a business case, public interest business case basis. Never mind this is going to stimulate the economy or not. There's a good case to be made for the right projects that will boost productivity and improve quality of life, to make those investments when the government can borrow basically for no cost.
What about building a pipeline to the east, to the refineries on the East Coast?
Well, there's a certain national dream element of that, and certainly Alberta needs to have a pipeline to Tidewater in Canada. And it's also true that Alberta has done the heavy lifting in terms of equalization payments over the last few decades. So, I think the case is pretty strong if the business case is there, depending on what the requirements are for TransCanada. Don't ever discount the ability of governments to make something unprofitable, but in general, one would hope that this is a project as a nation that moves forward as it appears to be in our interest. And for those along the line who are concerned about the environmental aspect, I think that's legitimate. But let's have a framework and deal with that as quickly as we can. One thing I do find quite ironic is that a number of mayors in Quebec are opposed to the environmental aspect, yet they just there was a freight train that blew up in Quebec carrying crude oil that killed, I think it was over 50 people. Yet, we're having this hysteria over a pipeline, and I don't get it. Maybe I'm missing something, but I don't understand how a group of local politicians in a province where they've had this devastation via crude by rail are trying to block a safer mode of transportation. I just don't get it.
Well, it seems would rather have single hull oil tankers from Saudi Arabia pulling up to the docks in Montreal than the safest system of oil shipping, which is pipelines, and modern pipelines, which aren't like the old 50-year-old things we have now.
Well, that's an excellent point. We have a big debate about tankers going through Burrard Inlet, and they've been doing that now for decades. But there's also the issue of tankers going through the St. Lawrence River, and why hasn't that caused a lot of problem? Why is it all of a sudden when it's crude oil from Alberta? So I think the federal government has to get on top of this file because it has huge national unity implications if it's not handled properly.
And of course, the refineries on the East Coast would gladly see Canadian oil because it makes sense. Plus, you could make a deal to buy the oil in Canadian dollars instead of U.S. dollars.
Well, and politically, this is why I think the deal will get done, because the Liberal Party of Canada has every seat in New Brunswick. That's where the Irving refinery is, I believe. And they have every seat in Atlantic Canada. So I think the deal is going to get done. That would be my prediction. I'd be surprised if it doesn't.
Ted, what do you see for the current price of oil? It took another big drop today.
I go by this is where one thing with the Bank of Canada and I will agree on. I think you have to look at the current price of oil, and you look at how the futures markets, are basically pricing it, and that's what you go on. So I don't, at this point, I think you have to take it for what it is. It's a low price of oil. I think you have to expect a low price of oil until there's a big fundamental change, and so I'm not that optimistic that we're going to see $60 oil anytime soon.
Ted, thanks a lot for chatting with us.
Anytime, Jim. My pleasure.
My guest has been Ted Dixon, CEO and co-founder of InkResearch.ca, Canada's first online financial news and research service. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our popular YouTube channel is Talk Digital Network. Comments can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.